A very good afternoon, everyone, and a very warm welcome to everyone who's joined me today on this uLaw webinar, which is actually accredited for 1 hour of CPD credits, both in Ontario, British Columbia, as well as Newfoundland. Once again, for housekeeping purposes, I do kindly request you to mute your phone lines and kindly do use the chat window to ask any questions that you may have. And as part of the email that we sent you inviting you to this webinar, we have sent you a link that you can use to mark your attendance so that you can confirm that you attended. That's so that you can, again, if at all we're audited for CPD purposes, we can give the Law Society your name and ensure that you did attend today's session. Okay. Once again, I confirm that today's webinar has been accredited for 1 hour of CPD credits by Ontario, British Columbia, as well as Newfoundland. And today's topic is going to be on the Law Society's bookkeeping compliance. And kind of our tagline is really, should it take you 10 minutes or a few extra minutes, or should it take about 3 to 4 hours that it otherwise does if you're not using what we call a legal accounting software. Okay, but beyond just the usage of the software, I think today's session and what has been accredited is truly to highlight the different components of the compliance documents and using uLaw as, I would say, a medium to try and walk you through the different features and functionalities of those documents, the flavor of those documents, the essence of those documents, and the important pieces of information that you do need to capture in generating those documents. Regardless of whether you use an accounting software or you do this manually, using an Excel sheet maybe, regardless of that, we'll first and foremost cover all of the critical data components that the Law Society requires you to capture as a big part of your business. Right? So we'll look at that. We'll look at the different types of reports. There's the same piece of information that may be captured from various different angles that can actually give you a totally different piece of information, truth to that transaction, if you will. And hence, not just ledgers, it can also be journals that capture some additional information about that transaction. Okay, so we're going to be talking about all of those bookkeeping compliance documents. These are documents that are asked for either during your audit so that you can keep them ready, as well as something that is expected out of you to generate on a monthly basis, so that you can have them available when that audit happens. Okay? Like every other uLaw webinar, today's webinar has an agenda. It's a pretty comprehensive set of items that we want to talk about, and I want to leave some time at the end of the session to walk you through these in a real-life example. Again, just using uLaw as an example, but that would hopefully pertain to any legal accounting software that you may already use. So from an agenda perspective, we're going to talk about, really quickly, what are these bookkeeping compliance documents, starting with your ledger documents. And depending on your legal practice, you may actually have trust and general, or may only have general ledgers. So it's important to keep in mind that it's totally left to your way of dealing with your business. If you're not in the business of dealing with trust money or retainers, for example, then obviously those ledgers do not apply to you. Okay. So we're going to talk about trust and general ledgers and what are the critical data points that are collected across these two documents. We'll highlight them and we'll show you how easy it is to generate them as well from a uLaw legal accounting standpoint. And then comes our journals. What are the disbursement and any receivable journals, and journals for both trust and general. Again, what are the data points and why do you really need to manage journals? What's there in the journal document that's not already available in your ledger? Okay, so ledgers and journals, very critical to your bookkeeping compliance set of reports or documents, if you will. And the fundamental, even before you generate them, one of the fundamentals of legal accounting is the concept of reconciliation. For those who do have a trust account, obviously very, very important to reconcile your trust account on a regular basis. Now, how regular it can be definitely determined by you and by the help that you have and how disciplined you are in ensuring that the numbers in real life are both tracked as well as measured as well as reconciled with your bookkeeping software. And we'll take a quick peek at how we've tried to simplify the whole reconciliation process for both trust accounts as well as your general accounts. Yeah. And once you reconcile your accounts, you can be rest assured that the numbers are locked down because you exactly know that these were the transactions that happened in that month or that time period, and hence the ledgers and journals, when generated after the fact, can actually give you that sound feeling of true numbers and the fact that there's nothing that can be wrong about those numbers for that particular time period. Okay? A fee book, a very critical component. We'll talk about, again, the data points, the information that's captured in fee book, and why you're required to maintain it. So all your invoices, including your dockets as well as disbursements, are all captured within that fee book. Truly, it's a great sound of all the invoices across all your clients. Not a specific client, but it's across all clients for a time period. And depending on the province that you're from, there may be some additional compliance documents, such as Form 9A, which is a document here in Ontario that is used to represent any time you do a trust transfer from a trust account to a general account electronically. So basically going on online banking and just moving money from one online bank account of a trust account into an online general account. If you do that in Ontario, then you are mandated or required to produce a Form 9A for every transaction that happens. Okay? Now, let's say these are the set of documents that at a minimum you're required to present at a time of audit or something that you're required to maintain and manage on a monthly basis. Knowing that legal professionals are busy and you've got your hands full already on a day-to-day task, how much time are you personally spending and how are you creating that discipline so that you don't have to worry about these things? And what are the critical factors that can determine how you manage these documents without having to spend too much time is another subliminal component of today's webinar as well. Okay, so can you actually do this in 10 minutes or a shorter span of time rather than having to spend, let's say, 3 to 4 hours at the nth hour every time you're being called for such a review process? Okay, so we'll talk a little bit about some best practices, things to keep in mind, and last but not the least, once again, highlight, and I would, for lack of a better term, not market uLaw, but really market to you or advocate to you the use of legal accounting software and how that can truly reduce the amount of time that you would have to spend in generating these documents, where your role then primarily becomes a role of data entry, ensuring that you're capturing the data and the real-life transaction as and when it happens. Okay, so that's really the agenda. We do have about 50 more minutes to cover these items, and I do kindly request you to contribute and collaborate using the chat window to ask questions, and our support staff are available to answer those at any time. Okay? So before I dive into really talking about the compliance documents, ledgers, and journals, once again, I'll briefly touch upon legal accounting systems, and this is taken right out of the bookkeeping compliance, where they highlight certain types of accounting systems that have been in practice for a very long time. So starting with the manual double entry, and we do have clients who still, when they maybe migrate over into uLaw as an example, we have helped them move away from these manual double entry systems. And these were manual systems that our clients had managed and maintained, and it was great till a certain point of time where there was very limited clients and maybe the workload was not as exhaustive, and more or less systems were not available at a cost-effective model that made it easy to make that transition from a manual system. The fact that it was simple and inexpensive, right? But the major disadvantage, especially with today's time, is the amount of time that it takes to generate these Law Society documents and the amount of time that it actually takes to keep a tab, ensure that you're documenting each and every component manually, and there's no automated way for you to manage those ledgers. Okay? And through the evolution of time and through the evolution of technology, we've now moved away and we've made it, I would say, a bit easier on legal accounting or legal professionals to manage legal accounting, from a manual double entry system to a one-write system to a spreadsheet software, which I'm sure you're well aware, such as Microsoft Excel or Google's Sheets, to a general accounting software. So that's as far sophisticated as many of our clients have taken it, where they use maybe a general accounting software such as QuickBooks, Xero, that allows you to manage your your business accounting. And there's maybe force-fitting those systems to be used for legal accounting as well. And then there are the pure play legal accounting software systems. Okay? And these systems are what we call purpose-built to manage and generate in a lesser amount of time the appropriate compliance documents, as well as giving you the flexibility to capture data as it's meant for a legal business. Okay, so for trust, for example, making it very compliant, convenient to manage and track trust-related information, giving you, a better sense for what those numbers represent and how they can then be reported in forms of reports and documents that are a much-needed requirement from you as a legal professional. It is an expectation out of the law society. Okay, so that's really the evolution, and where we are today with the advent of technology is one step further. So we've gone away from just a legal accounting software to cloud-based legal accounting software, giving you the power of anywhere, anytime. Being able to use your phone to docket, using your phone to be able to look at information. And that's the advent of technology. And obviously it's going to only get better. And with cost being a commodity, it's only going to get cheaper. Okay. And regardless of the system that you choose as a legal professional, the fundamentals of the information and the data and the reports that need to be generated, reported on, remain to be the same. Okay? So we'll start with the ledgers, the trust and general. And again, reiterating, because we've had this question many times, if it's not in your business to manage with trust money, you don't have to deal with the trust aspect of the ledgers and journals. Okay? You just have to deal with the general. But if you are in the business of accepting retainers, which is a great way of safeguarding your time and your revenue, then yes, you do require these documents to be generated. So really the question is, how do you data enter and how do you generate these documents? Are there easier ways that you can do it? So from a general ledger or a trust ledger perspective, the bottom line is that as and when these transactions happen in real life, so you receive a retainer, and that's money into your retainer or trust account. You actually make a payment for a disbursement from your trust account. That's money leaving your trust account. These are all real-life transactions that occur every day, right? As and when these transactions occur, there is a requirement that in the background that you're able to capture these transactions in a record-keeping system, such as a bookkeeping software or a legal accounting software, even better, that gives you the comfort of capturing them as and when they happen and recording them and generating a report that can then reflect those recordings in a disciplined or a formatted way that the law society expects you to report on. Okay, so that's really what the ledgers come down to, because the ledgers do say a story. For example, each ledger does have a running balance by date. So if you just accepted $1,000 as a trust retainer, and that's your first trust money into your retainer or your trust account, and you've just moved that money through a trust transfer from trust to general for about another $500, then the running balance is 500, right? 1,000 in, 500 out, 500 still a balance. That's important It's really important for you to know your trust balances by client, okay? Because that's a very important component that Law Society looks at, so that they're confident that you're not misappropriating those trust amounts. And we've had a few stories in the recent past about legal professionals unfortunately losing their license because of misappropriation of trust amounts, right? Now, this is a great snapshot of what is expected from both a trust and a general ledger. So if you look at the left-hand side of the screen, I've got a client's trust ledger for a fictitious lawyer, Leslie. And on the right-hand side, I have a client's general ledger. And if you look at that, one of the common components of both these documents is the date. You definitely want to capture the date when that transaction happened. Particulars, which is really what is that transaction, okay? Then comes from a trust perspective, all that is expected is, was this money coming in as a receipt, or was this money leaving the trust account? Again, date-wise. And a running balance. So on the 30th of August, a mortgage advance was received, and hence it came into your trust account for $40,000. And on that day, your balance was $40,000. And the very next day, it was transferred to Mr. Taylor, who is the client here. And that was money that left your trust account, leaving you with a balance of $0 on August 31st. Okay? And let's take a simpler example where on the 5th of July, you received a retainer for $565. So it's about a great idea to do a $500 plus tax in Ontario at least, so that's $565. And then maybe you've, over a period of that week, between the 5th and the 14th, the lawyer docketed the effort, raised an invoice, and did a trust transfer for that eligible amount of $565 from the trust account and then left the trust account, leaving again the balance of $0. Now, if I were to look at, I would say, the general ledger aspect to it, there's some extra information that is captured. Okay? Let's take the same example, or maybe the Piper example. An invoice was raised, so between the 5th and 14th, right? An invoice was raised on the 12th for that $565, but in a general ledger, a big difference is divvying it up by the actual amount and if any taxes that are applicable were captured. It's important that you capture, again, depending on your jurisdiction, HST, GST, PST, and it's important to capture that so that it's easier then for you to report on HST recoverable or payables. Okay, so the same information. On the 5th, $565 was received as a retainer. On the 12th, between the 5th and 12th, obviously there was some docketing that was done for all the work that's gone behind representing this client, and an invoice was raised, invoice number 2, on the 12th. Yeah. And on the 14th, the eligible $565 was then transferred from the trust account and left the trust account, and it was a payment on account, and it was received into your general ledger. Okay, fairly simple. The point really is, it's not that the data is not simple, it's just a matter of the discipline you can build to make that a disciplined, repetitive process. Now you have one client, tomorrow you may have 100 clients. At the same time, how can I still represent the same data and the quality of that data in lesser amount of time? Okay, so we'll first cover the data components. So hopefully this was a bit clear about the data components that reside within these two documents. Okay. So we've looked at the trust and general ledgers. So now let's have a quick look at the receipts and disbursement journals. And that applies for both trust and journal. Okay. So if you really look at a trust receipt journal, again, very important. We know that Peter Piper paid that retainer of $565, so we know that from the trust ledger. But what we did not know in the trust ledger was how did Piper pay you, Leslie the lawyer, that $565? Okay? And some explanation on why was it paid for. Let's just quickly go back to a previous example. So you had a retainer, and that's all there was, of $565. Whereas receiving that as part of a journal would also reflect the date, the client, really source of the fund. Okay, that's really not a big deal here, where it came from. So who paid for it? Again, what was the purpose? What was the amount? But most importantly, how did they pay for it? So in this case, you received a check. Okay? And the trust disbursement journal truly talks about let's look at this. July 14th, a check was written to move that money from trust into general. And the same concept with general receipts as well. The date, the source of the fund, where does it come from, the amount, and the method. So really from a journal perspective, the extra piece of information and the story that this document tells is that this happened and it was happened for this purpose, for this individual, on this date, and through this method for this amount. Okay, so that's really the story. And you may want to say, why don't I just capture all of that in one document? But it's important that you make data points as simple and not convoluted with too much of information in one document. And that's the reason why the ledgers and journals have two separate stories to tell. Okay? So just a quick reiteration. We looked at trust and general ledger, and you looked at the quick data points. An extra piece of information, if you will, in the journal was really the method and who was it paid for. Okay? I know I'm running through this real quick because I want to spend some time to actually show you in real life how these documents are generated. Okay, now that we've looked at these documents, we have another 35 to 36 minutes left in this webinar. Let's look at one of the most important documents, one of the most feared documents, one of the most critical audit documents that a legal professional has to face. And that would be the reconciliation document. Very important, even further important if it's trust related. Okay? So, and general reconciliation, both are very important. Even further important would be your trust. And let's take a quick moment to review the components of that trust. I hope you're able to hear me okay. I know there's a bit of a technical difficulty. I apologize. All right. So what is the reconciliation, right? A reconciliation truly is an accounting procedure, and we took this off the wiki. It's truly an accounting procedure that demonstrates that your transaction recordings are correct. What does correct mean? It really is marrying what happened in real life and transacting the same dollar amount, the same transaction with your bookkeeping software, making sure that they both match. One is a real-life transaction that happens every day, and that only you're privy to that truth. The bookkeeping software obviously requires you to dictate that truth back into it so that it can start to generate all of the documents that you need. So all you have to do is make sure that the transactions as they happen are reported, tracked, and measured in the appropriate bookkeeping software. And the reconciliation process highlights the key aspects of those transactions. If something was extra in real life that the bookkeeping software didn't know, then those components need to be tracked as well. A very good example is a bank error, right? So we talk about that in line number 2. So what are these activities that are recorded in your trust reconciliation report? Step 1 is recording of the bank statement and balances. So let's say you're doing a reconciliation every month. Okay, so on April 1st, you do the reconciliation for March, and so on and so forth. So let's say we do reconciliation for March 2018, then truly you're choosing that date as the month end, just as it says as of August 31st, you're choosing the date. What was the balance on March 31st is really the question. You can enter that. How do you do that? You open up your online bank account or you generate your bank statement, type that information in. Were there any outstanding checks, which obviously need to be listed as well? So here are some of the outstanding checks that are listed. Were there any outstanding deposits? This is money going in. Plus, very important, something that the bookkeeping software may not know is the fact that you had a bank error. So on the 29th of March, let's assume that by mistake your bank charged you a service fee of $5. Okay? What that really means is on the 29th, the bank would have technically $5 less than what your bookkeeping software knows. So if the bookkeeping software thinks that you have $500 in your trust account on March 29th, the fact that it doesn't know that on the 29th of March the bank took away another $5, so it's down, it's actually reflecting $4.95. Okay? So by telling through this reconciliation process the difference, if there are any, between the real life bank account and your bookkeeping software is truly what's reflected in this document. And last but not the least, obviously, a list of your client's trust balances and what's called trust listing. Okay? These are the 4 critical components of every trust reconciliation report. Again, keep in mind, this is a webinar specifically to talk about highlights, these compliance documents, but then also walk you through a quick example of how you can generate them too. Fee book. We spoke about that being a very critical document as part of your compliance set of documents. Okay? What does it take to maintain them? What are the data points, again, that are captured in this fee book report? And what is the story that this document is telling? If you look at that July 12th, Peter Piper, same example, we raised an invoice for $565, right? What is the fee book telling us? On the 12th, you raised an invoice, and the invoice number was 002, and that was for Peter Piper. The fee was $500, the HST was $65, and the total billed was $565. So by date, by client, amount split by fees, disbursements if any, as well as any HST billed, with the total is the story that the fee book is telling you. Even more important is to ensure that you capture the disbursement. So if let's say this was actually a $665 bill with $565 in fees and HST and maybe a $100 application fee, that needs to be captured in your fee book as well. Okay? Because the reason we say that is whatever was the fee, including the disbursements, are recoverable. So if the fee is what for the effort you put in as a legal professional, whereas the $100 is the application fee, which is the recoverable expense. Not just free money, it's a recoverable expense, which is a disbursement that the client needs to pay you. Just that you paid for it in advance and then you're collecting it back. Yeah? So that's what's collected and the information in the fee book. Very important that you can also marry it to an invoice number, because that's the number of the invoice in which these numbers were represented, which is the 565 plus the 100 if any. Because you could have multiple invoices in a day across various clients. Even for the same client, and this is another important aspect to it, if there are multiple invoices for the same client, that needs to be reflected. If there are multiple clients across multiple matters for the same client, that needs to be reflected as well. Okay. Now we've covered ledgers, trust in general. We've covered journals, trust in general, both for receipts and disbursement. We've covered what a reconciliation statement, trust reconciliation statement looks like. What are the 4 critical components of that trust reconciliation report? Then we've covered what is a fee book. Then we move on to some additional documents that may be important. So there's a quick question whether an invoice needs to be created or whether we can do so. It's very important to generate an invoice or a bill, whatever you call it, because that is the legal document that can show or outline the work that you've accomplished and the purpose for you to claim that money, especially if there are trust funds available, right? You want to be able to generate an invoice that outlines the work that you've put in and the money that you're going to be taking out of trust. So if you receive that 565 retainer, you do need to generate an invoice. And you need to do that first before you move the 565 from trust to general. Okay, so please bear that in mind. And we've obviously looked at examples where people sometimes tend to just move money randomly from trust to general. That would definitely be something that would be frowned upon, something that the Law Society auditors will catch you on. So please don't do the random moving of money. Let's say I didn't have money in my general account. I had to pay for my for my application fee. Please don't do that. If you don't have money in general, see if you can pay disbursements right off your trust. Okay. So make sure maybe you're ordering for some extra trust checks. Or if you do have money in general, pay for it. Raise the invoice, include those fees and those disbursements as part of the invoice, and use that formal document to be very confident of the money that you're going to be moving or the money that you expect to be paid. Yeah? Okay. So we looked at all those different documents. Here are some additional examples. A very, very common document that I've seen off late with the advent of technology. So you've got a lot more electronic bank accounts being opened, and this is for one specific reason that the province of Ontario has an electronic fund transfer form 9A. Okay. The form 9A captures the from bank account and address, branch address, the to bank account branch address, as well as the particulars of that transaction. So the 565 that was transferred, and and I'm sure when you do the transfer, hopefully the bank provides you with an electronic transaction number. So that will be a big part of that Form 9A, and then you are required to sign it off. You are required to physically sign that document, digitally or physically sign that document and have it available for each and every transaction. Okay? Other documents such as cash deposits that need receipts and deposit slips. So let's say you have a deposit slip that includes 5 or 6 payments, okay, and you just went to the bank and you wrote, all right, I got 565 from Peter, got 665 from John, you got that deposit slip. That's a very important document that you need to keep in mind. Actually have a physical copy of too. Or scan them, photograph them, and have them available digitally. And anytime you receive money in cash, it's a great habit and a discipline to provide a cash receipt to your client, as well as generate a duplicate receipt that you can retain. Very important, even so important if you're doing that for retainers. So if there's any trust money that you're receiving in cash, because I'm sure you're aware that you can receive up to $7,500 of cash for retainers. If you do so, regardless of the amount, please make sure you give them a receipt and hold on to a duplicate cash receipt so that, worst case, you've got a client coming back and saying, hey, I didn't pay you the $1,000, I paid you $5,000. You have that receipt that's been signed that validates the amount. Okay? All right, so that's pretty much it. Again, no rocket science. Those are 5 or 6 very important documents that you maintain and manage on a monthly basis, period. Now, the real question truly is, how much of time are you spending, or do you think in your mind you will be spending to generate these documents? Okay? If you have a great discipline, or you have great help, lots of money, then there's various different means of doing it. But if time is short, cash is tight, you obviously don't get a lot of help because you're an entrepreneur and you're a sole entrepreneur maybe, then cloud-based legal accounting software is a great answer to that and a great solution to that problem. It's not the only solution, but it is a great solution to consider. And the reasons are, if you are to do this manually, keep in mind again, this is not a paint a fear factor picture in your mind, but this is the reality of what you need to manage and maintain. Because every transaction in real life that happens in the accounting world is a double entry. So imagine the Matrix movies where in real life something happened, whereas in the Matrix world something else happened. If there's a real life transaction like you receiving a retainer, that actually means a double entry system and a subledgering system, which means that money is debited in one account, and it's credited in a mirror account. Okay? You obviously have to know how to manage and maintain those. Same information. We looked at how some of the information that's captured in the ledger is also available in your journal. Is required to be captured in the journal too, right? So there's some repetitive information. I mean, with today's technology and time, you don't have the time to deal with all this. Hopefully you don't have the time to deal with this. You have more time, hopefully, to spend towards your client cases, marketing your service, making sure you're part of different groups so that you can market your service at those groups levels as well. So yeah, you want to maximize your time for profitable business reasons. And let the software do what the software can do, right? From an accounting perspective, you're not only required to manage these documents and all these accounting compliance documents, you obviously need to manage and maintain matter and file information, which is a big part of your compliance. Legal accounting software do take the extra step of converting these file management components into easily reportable compliance documents. Okay? That's what the legal accounting software promises to give you. If it's cloud-based, obviously it's cheaper. With uLaw, there are some nuances that make it easier. There are some other softwares out there. PC Law is a great example of commonly used legal accounting software, but it's not cloud. So you then make the decision of which is the most appropriate for the time and money that you spend. But a legal accounting software, regardless, is something that you should keep in mind when you market and you look for options to save you time and money as a legal professional. Okay? But there's one thing, regardless of the software, regardless of the system, that I request personally of all the great legal professionals that have joined today, is capture the moment. Capture the data, record it as close as to when it's happened. Okay? We did a webinar earlier today. We have clients who captured every day. If there's an office expense, you just fill your gas for your car, as it's an office expense. We have folks who take a picture of that, make it available on your drive, automatically report that expense in their bookkeeping software, such as uLaw. There are others that do it on a weekly basis. So they say, all right, starting March 12th to March 16th, Monday to Friday, this is what happened. So they reconcile everything that's happened on that Saturday morning. There are others maybe doing it on a bi-weekly basis. There are others that unfortunately can only do it on a monthly basis. But the more you stay away from the real date that the transaction happened, there are chances are that you've either lost the memory of it, lost the actual record of it, which is, so let's say you had a gas receipt, and if you didn't take that photocopy that day and you left it in your car and you hoped that you would catch up with it next month, the chances are when you open that door and it was a windy day, you may actually just lose that receipt. Right? So, again, the closer you can be to the reality of the date and capture it then, the better you're doing for yourself and the easier you're making it for any system to help you with the reporting. Okay, that's my 2 cents. And with another 20 minutes remaining, which is perfect, let's use that time, maybe use the next 15 minutes to walk you through a workflow, how you would use a legal accounting software to capture the moment and all the reporting documents that happen automatically. Okay, so that's what we promise as the legal accounting software. And one critical component, obviously, is the fact that you have to stay compliant to be in this business. So that's something that I'm sure you're already aware and take seriously. Now, beyond compliance, obviously, there are some additional nuances and value adds of legal accounting software, which is it does keep you accountable. It helps you generate very meaningful analytics and insights so that you can learn better about your business. Okay, and then you can use those learnings to improve upon the business as well as grow it. And with us spending a good majority of our time, not with friends, not with relatives, we spend most of our times with our phones. So, unfortunate as that is, with the advent of technology, the ease of use of capturing the moment using a phone or an electronic device that's more portable is really the thing of the day. You don't want to be able to go back to your work, use that PC-based software, scan it, put it in. Okay? All right. So for those who don't know who we are, we're a proud Canadian legal accounting and practice management software. And do check us out if you want to know more about us. We do offer a 30-day trial sign-up, no obligations. Okay. So I'm going to quickly move on, again, to show you the core concepts of it. Okay. This is definitely not to market the product. I'm just using it as a medium. So let's take a very simple example. Let's assume the same Peter Piper example that we looked at in our in the use case that the Law Society had provided, right? So let's say we add a contact or a client in this case. Let's quickly go and add a client, and then we'll start to docket that client, retain him, and we'll walk you through that. So let's say there was sorry about that. I didn't mean to print. I'm going to say through an advertisement, I'll give them an address. All right. And let's save the matter and move on to the matter. Okay. So Peter Piper just walked into your office and wanted you to, he wanted to retain you as a legal professional. Okay. And we're going to walk through a very simple workflow of how you would go about serving this client and how behind the scenes all of the appropriate documents that you are required to generate one way or the other are made easy through a legal accounting software. Okay, so let's go ahead and create a file. Obviously, you can do a conflict screening and all of the good stuff, but for purposes of time and today's webinar, let's go ahead and create a file. I'm going to say it's a small claims, and maybe it's a fence issue. Give it a title. So this is part of your file management, which is critical, because when you do raise an invoice, you obviously do raise it for a particular matter. Okay. So let's say we've gone ahead and created that file, and now you do say you sign a retainer agreement. So let's say you generate a retainer document. Okay. So let's see, it's an elaborate or maybe a flat rate. It can be anything. You capture the 565, and you generate the retainer. You sign it. You get Peter to sign it, and then let's say Peter provides you a $565 check, because that's how it was paid here. Let's say Peter paid you in check that retainer of $565. Okay, let's go quickly and report that. It's a new retainer. Very important. We spoke about the date. So let's say this was the 12th. 565 was a bank transaction, so he did give you a check. So we'll say check 67, and it's being deposited into your trust account. Now, obviously, in real life, this is a placeholder account in your bookkeeping software or your legal accounting software, and it's meant to reflect the same account that you would have hopefully used in real life too. Okay, so let's assume it's a TD Canada Trust, and that's the account number. Give him a receipt. Very important that you give him a retainer receipt for that 565. Okay, so that's step one, is really capturing the moment, what happened. He gave you a $565 retainer check, and the bookkeeping software is now up to date because it knows. Same thing. Let's generate a duplicate receipt and provide Mr. Peter Piper with that receipt. Same time, I'm just going to go and quickly make available the ability to save all these documents in a simple digital repository. I'm just using Google Drive as an example. Okay. Okay. Let's make those documents available. Again, part of that discipline. Now, you've got that retainer, and let's say between the 12th and the 16th, let's assume that it's a flat rate, and this could be various ways in which you could have represented the dockets. Okay? I'm going to say expense issue matter. I'm just going to consolidate it within one docket, again, for purposes of time. And I'll toggle this to maybe a flat rate. I'll say overall in this matter, I spent 3 hours. Maybe my per hour rate is about $135. So this is the billable time. So you're just charging Mr. Peter the $500 plus tax. Okay, so we'll make that the 14th maybe. And that's just for the purposes of this demo. Let's just again add disbursements so that I can show you what that fee book looks like as well, which captures the disbursements for that matter. So let's go ahead and add that new disbursement. And I will say maybe there was a court fee of $100, again, just for the purpose of this demo. And I will say I paid it to the Ministry of Attorney General. And let's say I use my credit card. Or maybe even better is just use my general account and wrote a check. Okay, you can print that check too. But I'm going to add that $100 disbursement to the mix. So again, these potentially could have happened in real life. As and when they happened, you're collecting it. You basically are recording those transactions. There was $500, and so the $100. So let's just make this $400. Okay, 400 plus tax. Okay, so let's go ahead and raise that invoice. Because that's one of the critical components, as I said. I'm just going to change this to 113 to make it a whole number. $565 came in. That's a retainer, and $565 is leaving the retainer account. That's that it's a little more simpler. Okay. So one of the questions that were earlier on was, now that you've done the work, how do you reflect this in a very formal way to your client, saying that, thanks, buddy, thanks for your work, thanks for your money, but here's my work that's done. You can put in the description everything that you've done. Again, this is just an example. This could be exactly what was accomplished in that matter. And let's go ahead and raise that invoice. Very important next step. Record the transactions, raise the invoice. If you were to look at your ledgers prior to that, so we'll click on the question mark, the only ledger that's available is the trust, the fact that there's 565 in trust. Okay? That was the day it was deposited. There's nothing else that's happened so far. Okay? Let me go ahead and raise that invoice. I'll skip the preview. Not a great habit, but I'll skip it anyways. I will even mark it as paid because there's no money to be paid. I can choose any of my default themes or any of the themes I have. Choose the date that I'm going to raise the invoice. Okay? And then actually raise that invoice. Raise the invoice. You can digitally sign it, email it to your client. The fact that they've already given you a retainer, they don't have to necessarily pay you the amount, but this is you just telling your client, this is my right to move my money from my trust to general. Okay? Okay, you can move those documents and have them readily available. There you go. The invoice outlines the work done, the 452 plus the court fee of 113, the retainer that was received, and the balance and any amount due. Okay? And you can mark this as paid. Fantastic. Now let's come to all the documents that are required. So imagine that you do this day in and day out for about 30, 40 clients, okay, every month. You would still do all the capturing of data, exactly how we did it. Obviously, there would be a few nuances based on the matter. Maybe you capture each and every docket as and when it happens. So there's multiple ways of docketing, but let's say this is the crux of it. Now let's look at each and every document that we looked at. Okay? So I'll start my presentation once again. So we looked at trust and general ledgers. We looked at disbursement and journals, reconciliation of trust. Before I do that, one last step in the process is to move that money from my trust to my general account. So I click on the question mark, tells you right away that's the pending trust transfer. I click transfer. Now, many clients do it differently. Some clients write a trust check. Some clients do it electronically. I'm going to take the example of an electronic transfer so that I can show you the Form 9A as well. I'm going to basically pick both the fee as well as the disbursement, the eligible account, moving it from my trust account into my general account. And I would say it's an electronic fund transfer. And this is where I pause, do the actual transfer in real life between one electronic account to another, take the transaction number, transfer, and generate the Form 9A right away. So this is one of those documents that have to be generated and signed, in fact. As I said, amounts of fund to be transferred, the reason, just pre-filled. The from, the to, and you sign this. Okay? All right. There's a quick question about depositing using an Excel sheet. Not quite sure. Maybe we can take that question offline. Probably would like to understand it a little bit more. But if you do an electronic fund transfer, regardless of how you do it, you are required to fill that Form 9A. Okay? If you do it at the teller, then that's really not an electronic fund transfer, unless they actually use the same concept. That would be just an in-person transfer of funds. Now moving along to the bunch of documents that are compliance related in the next 5 minutes that I have, if you look at the compliance panel, let's first do the trust reconciliation, kind of show you how that works. So let's assume the $565 that you received for Peter Piper came in on the 12th. Really, the reconciliation is all about opening up your bank account, telling us that each of those transactions happened. So maybe you received the check on the 12th and you deposited it the next day, and it reflected the bank only on the 13th. Okay. A quick question is about the negatives. That just reports whether there's negative dollars coming out or whether there's positive dollars coming in. So if it's a service fee that was removed from the bank, it's negative. If there's for some reason an interest that was applied to your bank and they paid you $5, then it's positive. Okay, it's just a plus or minus of those numbers. So you go about looking at each and every transaction in your bookkeeping software as reconciliation, including that $565 that we received from Peter Piper, and marry that with your real-life transactions in your bank. And maybe there is a bank error. So maybe there's a $5 bank error, right? And then you got to say, what is your balance? Let's just assume there's a bank error. That makes it positive, right? That's extra money going in. That would be the bank balance. So now we've indicated that was actually a bank error, so which means the bank deposited $5 extra into that bank account for that month. If they withdrew $5, then you make that as negative. Okay? Then this would become $940. Okay? So if they withdrew $5, then it's negative. If they added $5 by mistake, then that's positive. And what you can do is you can do a weekly preview and then wait for the month end to do the reconciliation. I'm going to do the reconciliation anyways to show you the 4 critical components that are captured as part of the reconciliation report. And as that's generating, you can also do the general reconciliation. But I'll look at the ledgers and journals before I wrap up the webinar. So let's look at the trust ledger. Very important, right? So we'll do it, can do it by date, which is really what is expected. You do it by the month, or you can actually do it by individual. I'll do it by the month. And before I open up my trust ledger, here's the reconciliation report, which indicates, just like the Law Society's requirement, closing balance. So let's quickly look at the reconciliation report. Got the closing balance, any bank errors. So there was a bank error of $5. And what was the reconciled balance as of that date when you generated this document? All the cleared transactions. Again, this is something extra we provide. The most important component is how do you make up this $261,000 in trust? That's made up by the trust balances, of course, all these different clients that we have. Okay? So here's your trust reconciliation report. And here's your trust ledger for that month. For Mr. Roger Moore, let me quickly search for Peter Piper. There it is. Mr. Peter Piper. Going back to our trust ledger. Okay. From a trust ledger perspective, there's a date, particulars, receipts, disbursements, and balance. And it's the same concept with the ledgers. Date, particulars, you just reverse the columns. Got invoices, receipts, and balance. So there's a receipt of $565. That's money coming in as a retainer on the 12th using that check. And there was 2 transactions where money was moved from your trust account into your general account. When 113 was removed, that was the balance. And 452 was removed, that was the balance. Now let's look at the trust receipt. The bottom line and what I'm trying to prove is the data was entered as in capturing the moment. Legal accounting softwares can help you generate all of those compliance documents that are required so you don't have to manage and maintain them. Okay? That's the bottom line. And very important to capture as part of the receipt journal, we spoke about the date, critical component, receipt from, source of funds. Right? We looked at how journals look at source of funds. Let's look at our example. On the 12th, you received from Mr. Peter Piper for that fence issue, for that file number, and the purpose was that it was a retainer, and that was the amount paid. Okay? Let's do the trust payments. And the same thing would apply for your general, because that's just the other side of the fence once you've done the trust transfer. Okay. So if you looked at it, Mr. Peter Piper, you've got 2 transactions because there's one for 113 for the disbursement and the other for the 452, but it's all part of that same invoice, 2848. Okay. For that same matter, 805203, and it was done through an electronic fund transfer on the 16th of March. If I do a client's general, if you know, as part of the general ledger, we capture the HST received as well. Okay, that was the big difference between the trust ledger and the general ledger, remember? So we're going to talk about how we captured that $65, or not the 65, the 400 plus tax as the appropriate tax. Okay, so let me once again choose Piper. There you go. You've got $452. I would expand on it. You've got 400 plus the $52, which is the tax, and that was then moved through the trust transfer from trust to general, which is the payments in account, and that's the $0. Okay? And last but not the least, we looked at a fee book. For the month of March, let's generate that fee book. So what really happens is, because the legal account software works behind the scenes, it basically captures all this data as available in the database so that you can generate these reports and documents on demand. What's important is the data that goes behind building these reports, right? If you look at Mr. Peter Piper, you've got the date, the client, what was it for, and we divvy up the actual fees and the tax of $52. And that was the disbursement captured in this fee book. Because that's an important aspect of the fee book, is to capture both the billable as well as the disbursements, including any taxes that there may be. And that's the total amount for this particular month that you have billed. And that's the invoiced amount. Okay? And last but not the least, at any given time, you can start to generate any of your Form 9As that you may have. So this is a very common thing that auditors may actually ask you for your Form 9As for the last 6 months. Straightforward. These are all the Form 9As that you have generated or should have generated through your transactions. And there should be one for Peter Piper, unless we didn't do it. There you go. 565 for Mr. Peter Piper went from this account to this account. And if you've not already signed it and kept it, then you can always regenerate it and sign it. Okay? So as closing notes, again, we looked at the critical data points to be captured across ledgers, journals, other important documents, fee book, reconciliation reports, that are all critical reports and documents that are expected out of you as a legal professional from Law Society through their audit process. And most of these documents, if not all, have to be managed on a monthly basis. For example, the Form 9A is not something that you manage on a monthly basis. You manage it as and when it happens, to be quite honest. Whereas a reconciliation, you do it on a monthly basis at the least. You can always do it on a weekly basis too. What's critical as a legal professional in today's age and time is how you can divvy up your time and maximize that time to focus on more money-making, profitable time effort, and then leaving some of these heavy-duty crunching of reports to be done to legal accounting software or having a system in place that can actually help you with the whole process. And we looked at the different data points. So for those who are still looking to do it the manual way, hopefully you at least have a good understanding of all the data points that are captured and the story that is expected by each and every report to tell. Okay? And I would open up the floor for any questions that there may be particular to this webinar that we would love to take in the next 5 minutes. Okay, we've got a question about how do we report our attendance and on the reason. Okay, so as part of our email to you, we have sent you a link which allows you to mark your attendance, or you can just quickly email us at support@uLawPractice.com with your presence that you have attended the entire hour. And the way you can report the CPD is by logging into your individual jurisdiction, so Law Society of Ontario, BC, or Newfoundland, and then search for Law Society Bookkeeping Compliance. That's what you're searching for, and then you can say that you, and add the 1 hour for that. Okay? Perfect. How do we get the list of Form 9As completed? So you can either do it as and when those transactions happen, or if you needed to generate all of them on a specific timely basis, it's you're very welcome. You just move to accounts, document generation, compliance, or you can just basically look at other ETTR Form 9A, but my simplest way would be compliance. You've got a current transfers from Form 9A, 9C, and now you can choose right on a date range. So you can say for the month of March, for the entire quarter, for this whole year, this particular week. Okay. And hit the download button. And what this does is uLaw captures each and every electronic fund transfer that you have done this month, and then gives you the opportunity to reprint it. Okay. Yes, the question is about the CPD hours, and this CPD session is accredited for 1 hour of professionalism hours. Okay. CPD, yes, it's in Ontario. Okay, so a question is around the set of documents that you generate on a timely manner. And what we recommend, again, there's different aspects of practice management, right? So at each and every step, we do a 7 obligations of legal professionals. So an obligation as a legal professional, you have compliance at each and every stage. So you have compliance from a client intake, you have compliance of generating source of contacts. Okay, so we've generated those under compliance, not just for accounting, but also for each and every aspect of your business. So under contacts is where all your client intake related compliance documents are, your source of contact. Source of contact is a document that auditors ask for just to get a sense for how you're getting your leads, because they want to make sure you're just not a referral business and you're actually a truly legal professional. So that's one example. Likewise, under matters, these are all client-related or file-related compliance documents that you may be asked in an audit. Okay, so for that, again, under document generation, there are compliance documents. And I would say about a good 95% of the most important documents have been encapsulated under compliance. So right from your client ID verification to even your closing letter, because sometimes auditors may ask you randomly for a closing letter, just to make sure that you have that as part of your process. If you don't, then they would recommend that, right? Statement of activity, very important. These are all, again, client-related. Likewise, under accounts, you've got your compliance. And there's some additional compliance documents, again, depending on your style of business. If you don't have much of inter-matter trust transfers, like if you're in real estate, there's quite a few inter-matter trust transfers that happen. Not so much for HTA or small claims, but it could happen. You may actually have multiple matters for the same client, and they may just transfer over money from one account to the other, in which case you do have to generate all of your inter-matter trust transfers for that month or time period. Okay? I hope that answered that question. Yes, one is under the tax, where you've got the tax report of HST, where you generate it on a quarterly basis. From an income revenue standpoint, I really recommend either doing your profit and loss statement or the trial balance, or even the balance sheet, because they all, again, tell you different stories. I would start with the trial balance, or even better, balance sheet. Okay. So here's if you're looking to pay HST, then you would generate the HST document. If you're looking for taxes for your income, then maybe a balance sheet would do. You can do a detailed category or summary. And here's your taxes for HST related. You owe the government for this quarter $6,800, because uLaw captures both HST paid as well as HST received. If I were to come down, I would be able to see the $52 of HST we received. There you go, from Mr. Peter Piper. Okay? And here's your balance sheet. So this by itself should tell you the different assets that you have, right? Trust balance, cash, receivables. And this is exactly what your accountant would do for you as well. If you want to just look at the bottom line, then this is what it is. Okay? So retained earnings for the current year, and that's the tax bracket that you would be in. I'm sure we all love to be in that tax bracket someday. Question is, can you invoice a client for multiple matters on the same invoice? Um, Technically, we would recommend no. We would keep an invoice to a specific matter so that it's simpler. But if sometimes you are working with another firm and you've done work for two separate individuals, then you may want to add those two individuals as part of the same invoice. But if these are two separate matters by themselves, for example, for the same client, Peter, if you have a small claims and another matter is for HTA, then please do invoice specific to that matter. Because what happens is you are then able to have a better control also over the areas of practice where you're making money too, right? Because you're able to then drive analytics, such as this. But if you didn't generate invoices specific to a category, and if you combine the small claims and the HTA in a single invoice, then it's harder to capture data insights like these. Okay. All right, so if there aren't any further questions, I thank you once again for joining me today. I hope you have a great weekend, and we'll look forward to seeing you in the next webinar. And the name of this webinar is, the exact name is Law Society Bookkeeping Compliance. Okay? Well, thank you very much. Thank you for the appreciation, and thank you for joining me today. I have yourself a great weekend. Take care.